JB here. Hope I was doing outstanding. Monday, December 15th, 9:15 on this a fine morning. Really quick rant, talk about the market. Some names I'm looking at go from there. S&P in the green. Um, Thankfully survived the weekend, right? Friday's market a little uh hairy. I don't know if that's the best word to describe it, but interesting action Friday. I thought maybe the market was going to end the week unscathed from the Fed rate cut. We had Oracle earnings, which Oracle sold off. Market was able to hold its ground regardless of that. And then Broadcom after the close Thursday, I thought it was a great report. The stock actually spiked all the way up to 420. Uh, Not no credit there to Musk or what have you, just joking aside. And then the conference call came on and it reversed. And then it was down in the 380s. And then market opened Friday. I'm like, are we going to bounce? Is it going to find footing? And I was almost going to get some spec calls. And they just kept selling off. And next thing you know, by 11:30, it's down to 355. The markets hit lows at 11:30. The SPY all the way down 679, and then we bounced. And like other times we've had these sell-offs, the market, it seems to find uh, some floors around 11:30. That seemed like that was some of the case on Friday. And also, just looking at my watch list, a lot of the watch list, despite the market being down, SP down 1% or so, market was still half my watch list was in the green. So we'll see what happens this week. We get some data, right? Finally getting some of that data that we've been waiting for. I wouldn't even say waiting for. It just makes for great market commentary, right? Everybody's worrying about the jobs number and inflation because we haven't got that. But tomorrow we get the jobs report, and it's not a full allotment of the data, right? Some of it's not 100% yet, but we will get the jobs report. They're saying, last Wednesday, Fed Chair Powell talked about the possibility that the jobs numbers being miscounted to the effect of possibly like 60,000 jobs, some crazy number. But like the likelihood here is that the jobs report is going to come in somewhat flat. And you know what? Even if it's negative or weaker than expected, it's like it almost then it gives credibility to the Fed cutting rates, right? And the folks who thought maybe we shouldn't have cut rates will kind of give a little argument against that. And then Wednesday after close, we get Micron earnings, so that'll be important, especially with Oracle and Broadcom last week. And then Thursday we get CPI data, and the CPI data again, similar to the jobs number, it's not going to be a full bag of data. And it's like you would hope, and hopefully the thing is this week there's no crazy surprises, right? No crazy surprise either way in the jobs report tomorrow, and no crazy surprise on the inflation front. If that's the case, and I think I like to have a glass half full kind of outlook on things. Maybe the markets can find all-time highs into the end of the year. That would be the optimist in me. But you have to be open to both possibilities, right? And I posted this morning. This is the kind of stuff that you see every day now. These parallels, and there's always parallels, and it happens. Whether it's 5 years ago, 8 years ago, 10 every market top or every time we hit an all-time high, there's people bringing up the parallels, and the one that they always bring up is the dot-com bubble, because that's the easy one, right? Everybody knows about the dot-com bubble. So when you bring it up, of course, you don't have to explain it to people because most people know what happened. Of course, every year it goes by, it's further out in the past, but most people know what that is about. But there's another article, and this article again points to the same parallels. They talk about PE ratios and all that fun stuff. I mean, and always the difference is that these companies back in the dot-com bubble didn't have revenues, right? They'd be up 2,000% in a matter of 3 months with no revenues, right? So, and now, of course, the big great analogy now is the capex spend, right? Back then, you're building fiber optic cables, and Cisco was building all these switches and routers, and so now you fast forward to 2025, and now it's the capex spend is here we go again. But it all sounds great when the market's hitting highs and it gives clickbait, right? It's people want to read that article, say, oh my, what's going on? Should I be selling everything, right? But anyway, we'll see. I always try and keep a glass half full kind of outlook on the market, but being open to both scenarios. So that's kind of the overall market. It's funny. Then they talk about like surveys. I'm trying to think about the surveys last week, and it's always like the survey comes out, says consumers think grocery prices are having continue to increase or whatever the case is. And I'm like, in my head, I'm like, what consumer has ever been interviewed after going to a grocery store and they come out and say, wow, prices are lower than last week, or prices are great? I don't think anyone in the history of shopping at a grocery store or any kind of place says, wow, prices are great, right? Unless you got some crazy deal on Black Friday or whatever, and even that. So that's why I take those surveys with a grain of salt. But anyway, similar with the market, it's like if you talk to somebody who doesn't trade the market and they just all they do is read headlines and all the public, the Wall Street Journal, and then they wonder why they and then they question, wow, why is the market up today with everything going on? And that's why it's always good to have a glass half full scenario or outlook on the market because by all measurements, markets could head higher over the years. All right, that's overall market. I don't want to go on too long around here. Not to pat myself on the back here, 679 continues to be that area of support on the SPY. So if we do have some kind of pull here today, can't rule that out. I mean, we're at 685 here in the SPY. That'll be a key spot to watch for support. We break under that, I'll certainly be open to adding some put hedges. The thing about Friday, that 679 held, so kind of prevented me from adding some put hedges. I was actually looking at SQQQ calls. Thankfully, didn't get those. We'll see how the rest of the week plays out. And tomorrow, will go a long way into the direction for the market for the rest of the week with that job support. All right, that's overall market. So just quick on individual names. First, just really quick on the cannabis space. Rumors out, reports out that the Newman's POTUS may sign some kind of executive order reclassifying marijuana. I still don't understand how this has not been reclassified, and this chatter continues to go on month after month for the last couple of years. But every time these names, especially CGC, ACB, they get some momentum, they create opportunity on the call side. And there's been plenty of times over the years where I got the calls. There's been, I don't know if it was 2024, 2023, where there was thousands of percent on the upside. I don't know if we're going to have deja vu here. I do think there's an opportunity. They were rallying on Friday. I went and got those April strikes. They announced an acquisition this morning. I don't know if that's going to do much to the stock anyway, but it's gapping higher. 199 is a big spot from back in May and the summer. If it breaks over 199, I might look for some more strikes just so I don't want to load the boat per se, but I do want to look for more positions if it does break some resistance. So if it does break to the upside, I'll look for more strikes. And then on the flip side too, I'll be locking some of my April strikes into covered calls when I get a chance for 100%. And then also in the space, IIPR, which typically, one of my favorite names because if you look at names that I mean, this one's well off its highs, but benefits from the reclassification. IIPR is the only true REIT in the space. So take a look. 5750 was the big spot when I had the calls. I think it was back in the summer, and I was able to play those for nice profits. Broke over that on Friday. They just announced their divvy this morning. It's $1.70. So you got to factor that in with the call prices. Ex divvy date, I think, is December 31st, so in 2 weeks. So if you go out and roll out to the January strikes, I might look for some 65s. But again, factor in the ex divvy there because you wake up the next day after the dividend, it's going to drop $1.70 on the stocks. So the calls kind of skews them on the. They look inexpensive on a risk reward basis, but it's because it's factoring in that ex divvy date. All right, so that's IIPR. So I'll be looking at those names today for continuation. And then other names I'm watching, this is the first week in the last month and a half. I haven't had Reddit calls into this week, and it's in here at 224. My thoughts here on Reddit. I think at some point it's going to get some FOMO. There'll be some news at some point in regards to a licensing deal or updated deal from Google or OpenAI. So still looking for position here on Reddit. Surprised last week. It just couldn't break through that 237 handle. It gets back over there. I think it's off to the races. Same with Roku. I was staring at all week last week. Even with its pull, let's see here. Sorry. Tight boulder band breakout. So even with its pull, it was still up 8% last week. Still looking for a position there at some point to play for a move to the upside. You take a look at Netflix today. Let's see. At some point, you got to think that reverses course. Not a name I'm going to trade though on the call side, just because I haven't got a feel for that one. I'm not going to trade that one. And then last but not least is RH. So RH, I traded those calls Friday morning. It's one of these earnings reports is going to mark the bottom for RH. It wasn't the best earnings report Thursday after the close, but it does. I don't think it needs a great earnings report to mark the bottom. The market's going to at some point price in a growth, right? And typically the earnings report it's backwards looking, right? The earnings it doesn't tell you what's going to happen in the future. The guidance does. And the guidance was a little mixed. So, I'm watching it. It reversed course. I think it was 144 in the pre-market overnight. Then it was starting to break into the 160s, high 160s. I'm like, this might continue to go. I went and got those 200 strikes, got through 170, couldn't hold that level. Didn't want to lose the profits, close them out for a small gain. I'll be watching today. The big spot there is at 168 50-day moving average. It gets over that. I might look for some more strikes here today. And that's it, folks. Let's have a great day. I'll be back on audio later. Rock and roll.